Alright everybody, let's go through today's market updates. Today is March 1st, 2012. And if you're watching this video sometime in the future, you can use this as a short educational video training on some idea of how we look at focusing on the market and how we are selecting some of our trades. So in front of me I have my charts and have a bunch of currency pairs, and we're going to go through a lot of pairs today very quickly and to show you why we took some of the trades that we did. Now, we're not going to get deep into the sentiment of the market on some of these currency pairs, and we're not going to necessarily get deep in the fundamentals of what's going on in the market currently, but we're going to at least look at some of the technicals today on some of these currency pairs. So, and we'll pop some trades in and take it from there. So let's start here with the CAD CHF, which is the Canadian dollar against the Swiss franc. And if you look here, basically since last summer we saw price go up, and it's come into. Remember we talked about in one of our webinars, and if you haven't signed up for one of our webinars, I highly suggest doing that underneath this video. If you're watching this on YouTube, there's a link to click on the video, and it can take you to not the video, I'm sorry, but to the webinar registration. We have a lot of webinars that we do a lot of in-depth training, and that is tradeadvisorpro.com/forex. But you can see here, since about the third week of September, price has been going into a range, and one thing we do talk about in one of my webinars is that currency pairs trade in a channel 80% of the time. Okay, so 80% of the time, the currency pairs are going like this, and the key is to find the channel. Now, in this chart on the CAD CHF, the CAD Swissy, we have multiple channels. So we have a channel here, okay. And then you can see, and I'm just drawing this out just as I go, okay, a channel that's been here, which is unbelievable opportunities. And then you can see that there's kind of a mini channel kind of going into here. So it's not the greatest channel, but let's look at what we got here and how to trade these channels. Now when you go back, and I always trade off the daily charts. Now you can go in monthly, daily, and then cut down to the 4-hour charts and down to the hourly charts. But since we focus on mainly over here at Trade Advisor Pro on swing trades, we like to use the daily charts as much as possible. And so one thing you'll see here is the currency pairs are swinging in this range, in this channel, for approximately, let's see, September, October, November, pretty much almost 4 months. So there was a lot of trading opportunities to sell here, to buy here, sell here, in that range. And if you zoom this into like 4-hour charts, you can see that there are a lot of opportunities in here over a week-long period. You can see how you could have bought and sold, bought and sold, bought and sold, bought and sold. So you always want to look at ranges. And then this is called a trend line. As this trend was going up, you put the trend line at the bottom. Of course, you can pop out at the top to find out where the channel is at, and you can see how this has been going up. It broke sideways out of the channel, going into a little sideways spin, dropped way down, and it's going back up. Now, looking at this, there is potentially a good selling opportunity right in this area here, okay? And so I'm looking at two potential trades on this currency pair right now, and that is to sell the CAD CHF and to here, and to buy it down here. Now the problem is this currency pair has been slowly but surely going up, went sideways, going up, went sideways, and I'm more apt to do a buy. I mean, this would be by far the safest trade, but this is also a good opportunity, and this trend line is held. So what I would do in this current situation is I would put a sell opportunity here. So I'm going to, there's two trades here. Let's see what the price is here on this line here. It is at 92.50. So I'm going to say 92.47 will sell. In fact, I'm going to write this stuff down here. And what we do want to do for a stop, now let's talk about a profit target. Our profit target is going to be right in this range here. So as price comes down here to about the 9 mark, about 9,000, we're going to take a profit. So I'm going to say you want to do a few pips above. So let's say your profit target on that is going to be 9002, okay? Which we'll take into the buy position ultimately. Let's look at where to put a stop, because if you are selling here, you have to put a stop loss high enough that you're allowing the market to move, but that it has to break through a solid previous swing high. And so right here, you can see that there's a swing high twice. The thing tested the 9400 mark, right at 9400. Okay, it tested, boom, it rejected over a couple days, almost 5 days later, it tried it again and rejected it, and it's come down ever since. That would be a strong resistance point. So, and that line is 9400. So I usually put it like 30 pips higher than that. Let's say 9434. Okay, and I'm going to color that red. That's going to be a stop. Now I'm also seeing a buy opportunity if price over the next few days, sometime next week, would drop down to the 9.9000 mark. Okay, so if price would drop down to the bottom of this channel, I would take a buy at 0.9002, and we want to take our profit target right up in this range here. So we'll say we want it before the line, because you see here, if I zoom this in right here, you'll see that over several days, 3 days, price was close to the line, but it didn't quite hit. So this line is about the 92.47 mark, and so I would say at around 92.36 we want to pull our profit. Now let's look at it. A stop loss. This trade comes down, it breaks through, and it continues breaking through. Where is the next current swing low that this thing had to break through? And we're going to look way back here at the end of November, around Thanksgiving. And you'll see that right around here, the 87.59 mark. Now at that point we have about a 250 pip stop, so we're going to drop down even further and put the stop at 87.28. Okay, so make sure you're using your correct equity management protocol, and you can log into our members area or watch our videos on YouTube about how to manage your equity per trade, because you're going to have to, you don't want to leverage more than 2% of your account balance on one trade. And if you're going to take this trade, you want to make sure that you spread your risk of 2% of your account balance between almost 300 pips. Okay? Does that make sense? Of course, if it goes again for you almost 300 pips, then you're talking about a 2% return. So I just would not suggest you leverage more than that. So there's two potential trades setups that if price would drive up, and it looks like we could be taken into this trade, and then we could have this trade pre-set up in advance for the, if price should drop back down, we could take a nice entry buy into that currency pair. So let's go back to our charts and see what else we have here. Now let's look at the Great British Pound US dollar. Okay, daily chart. You can see that ever since around second week of January, that this currency pair has been trending up, up, up. We took a couple buy opportunities here. I don't know offhand. I know we bought here a couple days ago and got a nice swing on that. You can see multiple channels, but slowly but surely, ever since this thing's been trending up, went sideways for a little while, and now we're back on an upswing. So what I would say is, one thing you got to look at is the average range, the average daily range on the pound is a couple hundred pips. So right now, price is currently having a hard time breaking up above the 160 mark. Okay, right here. It tried almost yesterday, and it didn't get quite as high today. What I'm looking at here is that this pair is going to drop back down, because here's the thing: you never ever see. Now this is rare. See how this boom, it just shot right up? But if you break each one of these candles down to smaller ranges, even here, you can see, like on this candle here, that the pair on January 25th went as high as 56.27, and as low as 55.32. So that was only a 100 pip range for the day. I remember back in the day when this currency pair would move 250 pips in a day. It was very nice. But here's what I'm going to look at. I'm looking for a pullback. This thing is trading up for a while, and I'm looking at taking buy positions only. I may have a sell opportunity here, short term, for a scalp. Let's just zoom this in a little bit more. Yeah, see, prices had a hard time breaking through that last year. And so what I would look at is that this thing is going to be trending up here for a little while. I'm looking for a buy opportunity right around in this range here. Okay, so I'm going to say at 58.12 is a good buying opportunity. And of course, we want to put our stop down below these two swings, down in this area here. Okay, and we're looking for price to drive up to about where it's at right now, around the 59.60 mark. So that'd be a nice 150 pip move. So let's see what else we got going on here. Let's look at the Euro Swiss. Now we're currently in this trade, and I think we got in right here around this line here, and it's been consolidating for a little while. We've been in this trade for a couple weeks, I do believe. It's going to be a longer term trade. I mean, we could literally be in this trade for months. Okay, so what we're looking for is price to eventually shoot back up into the 23.80 range on this trade. It could take several months before that comes into completely into fruition. You can see that this currency pair had a lot more volume at this point, the euro against the Swissy, but now it's kind of going into a consolidation, and it's kind of been doing a swing around. Notice it was going lower and lower and lower, and now it's gone higher, came back down, went there. So slowly but surely you can see that this thing is moving up. So we're going to stay in this current trade for a little while longer, but I'm expecting at least on the worst case basis we get a nice little spike up to 2100 soon. And then worst case we may take out, close 50% of our trade in profit and leave the rest of it to run all the way to 2400 mark. So let's see what else we got here. The Aussie dollar. Okay, this pair has been going up, 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 and because of some news announcements that came out in the Aussie zone lately, I'm expecting long term that this pair is going to take a dive back down, all the way down to, well, I don't have my information in front of me, but down to, I think it's the 1.0100 mark. So right around somewhere in this range here, we're expecting a nice pullback. So we are going to be short this pair, and currently we are in a position, actually I think two positions on this pair short, and I think we close out our first profit target right around this range, and I think we close one out right around this range. So we're going to continue watching this one to see if this thing is going to break back down, or if we're going to consolidate and run in a channel for a while. I prefer it being in a channel. If we can get this thing to stay in the solid channel, that'd be more apt to buy, sell, buy, sell, buy, sell throughout the channels. Let's see what else we got. The USD yen. Okay, now this currency pair has been trending up very strongly lately, but this pair can be extremely volatile, and you see some of these days just how jagged it can be. This thing, I would normally say let's take a buy position right around the 80 mark, but this currency pair has a tendency to just flip out and do it and just switch gears really, really quick. So I'm going to hang on just a little bit longer before I make any decision on getting into another entry on this trade. I'll watch it over the next few days, but I'm going to guess that the price is going to come down to the 80.12 mark, which would be a good buy entry, and continue back up. But I'm going to hang off a little bit longer, and we'll kind of see how this thing's going to play out. The Euro USD. All right, you can see that this thing, it was channeling in here for a while. We had a lot of buy and sell opportunities in here. We did very well on this pair, and then it broke out. We ended up getting stopped out of a trade, and now if we zoom in here, it looks like actually it's too much, that this pair has been really sitting solid against this little line here, which is 34.76. So right now you can see that ever since January this pair has been trending up, 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 up. So I'm more apt to a buy opportunity with this pair. I don't see tremendous entry points. I would say 3,200 would be a great spot. So we may want to buy that pair at 3,200, which is 133. 113 pips away. So for today's market's only open for a couple more hours. It's been a very slow market. If this thing continued to shoot down tomorrow, which is on a Friday, that would be a great opportunity for an entry point for a possible upswing back on Sunday when the Asian market opens up. All right, let's see what else we've got going on here. Euro Swissy. This thing's been trending down, and here's what you need to look at: the US dollar Swiss, not the Euro Swiss. I'm sorry, the dollar Swiss is usually the exact opposite is the euro US dollar. And it used to be pretty much exact opposite, but it's not quite as aggressive as it was. So you can see that this pair, we actually got stopped out on a trade here that broke down through here. It's consolidated for a while and that's shooting back up. We may be looking at a potential buy opportunity, but or a potential sell. Like we need to watch this thing. I'd like to see price break back into this old channel that it was in before we start getting in. So we're going to hang tight on this one for a little bit. The Aussie yen, one of my favorite currency pairs, but this thing is trending like crazy, and I'm expecting this thing to break down again. So we've been kind of holding off on trading this pair for some time. But because of the way it's been trending, I am looking at a buy opportunity here at let's see, 86. Right, we want to go right above the 86, right into that line here, 86.15. Okay, so right around 86.15, we'll buy this pair, and we're going to put a stop. If I could just change that, right below this major swing high right here, swing low. I'm sorry about that. Right there, so it's 84.54. We'll color that red so I can visually keep track of what's what. So 84.54 is our stop, and we're going to put our profit target right around where the current price is, around 87.50. Okay, because we're expecting. Let's color that green. We're expecting. What I'm looking for is since price is trending up, we only want to buy this pair. Okay, now so usually, and we're going to get into a different training on a. We have. I know we're working on a webinar right now on how to trade the Aussie yen. If you know how to trade this pair, you can trade this pair into oblivion, and it could literally be the last currency pair you ever need to trade. Okay, and on this pair, I only trade long. Okay, when it comes down to understanding the overnight interest rate differentials between the Aussie dollar, which is the highest paid interest rate, overnight interest rate rates, and then the yen, which is the lowest paid. So when you're buying Aussie dollars and selling yen, you're actually making interest daily from your brokerage account, most brokerage accounts, even if you're not actually closing out the trade and profit. So a lot of people they'll get involved in this currency pair for very, very long periods of time because this is what's called a carry trade. Because even from here to here, yes, you make a huge profit, but you're making all the daily interest by holding the position for a long period of time. So you can see that this thing has been trending up, and eventually we'll have a nice pullback way down into this range, and then we'll start trading back up again. That's what I've been waiting for. But right now, I'd be willing to take a trade here at the 86.15 mark. We want to close out our profit right around here and have our stop run around the 84.54 range. Let's see what other currency pairs we got going on here. Alrighty, the euro yen. This is one of my favorite currency pairs. What I'm looking at here, we traded this currency pair probably more than any pair over the last 6 weeks. You can see here, this thing just ranged buy, sell, buy, sell, buy, sell, buy, sell. An amazing opportunity. I think we took 12 trades on this. So here's what we've got. The price is slowly but surely trending. Now, we had a breakout, so we got. I think actually we did not get stopped out of this trade. You're right. We had a stop loss up in this range here, close to these bottoms over here previously. The price came up to 8,500, dropped down. We closed out at a break even, just because we weren't sure if the trade was going to go back into the channel. But what we can see here is this thing has a trend line. So the lows have been getting high. We got higher lows and higher highs. So we had this channel here sideways, right? But at the same time, there's drawing this out. This is not very difficult to figure out, people. Is that this thing's been kind of doing this at the same time. So it's kind of an upward range. So what we are looking for is we're going to take the euro over the last couple of days took a dive, which is potentially setting us up for a nice trade entry. So you can see we have what's called a confluence of events. Right in this range here, I'll zoom in here, you can see that price is almost near the bottom of this trend line. So we're expecting, if you look at it, how it's been running in a pattern, that price will drop down, take us into a trade, and shoot its way back up where we close out for a profit. Okay, and at the same time, long term, you can see that this has been a support slash resistance point line, which mostly support. You can see how this area right in here, which is around the 83.23 mark, has been a strong support line. So price is going to have to break through this trend line and break through this pretty solid support line, which gives us what we call a confluence of events. It's an area where we have multiple levels of support all in one shot. Okay, so what we're going to do in this pair, we are going to take a buy right around 83.30, and we're going to put our stop. Let's see here, right around these underneath these swing lows. So 82.57, yeah, 82.55 for our stop, and we want to look for our profit target up in this range in here. So because we're running in this little sideways to upwards channel, so we're going to pull out our profit right around 84.67. Let's pull back to this right in this range here. That looks pretty good. Yeah, 84.62. Because we always want to close out. You never want to close out on the line, because you'll see that sometimes price comes up to the line. See here, boom, 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 close, but didn't close out. So we want to make sure we close out in time to pull out a profit, because it may, if we put our profit target here right on the line, it may not actually hit the line, and then you find out the next day that price came all the way up within a few pips and then is halfway back down the middle. Now we have to wait for it to channel back up. Okay, so we want to take out our pips and take out our profit, because as we always say, pigs get fed, hogs get slaughtered. We want to be pigs. We want to take our pips and run, and we don't need to squeeze out every last pip. So again, what was that we're taking our profit? It was around the 84.62 mark on that currency pair. Okay, so that's where we're going to close out our profit target, and let's see what other pairs we got going on here for the day.
Hey folks, this is Josh Taylor with Trade Advisor Pro. Now, no matter where you are with your Forex trading, let's say you're a brand new trader, you've never made a trade before, you've been trading for a short period of time, but you're still getting your butt kicked, or you're a pro trader and you've been trading for a very long time, we're offering a free Forex training webinar that's going to show you step by step why 90% of all Forex traders fail and how to be one of the top 2 to 3% of traders who are super successful as Forex traders. This training video is going to go through all the steps you need to be truly successful as a Forex trader, and we're going to throw in a few goodies for you as our way of saying thanks. So hey, check the link below underneath this video and click on the link and go sign up for the free Forex webinar, and we're going to be giving you some free tools and all kinds of free goodies as well. So hey, thanks for checking out the short video, and I hope to see you on the webinar.